Hey everyone, and welcome to 1% BTC. I'm Dominic, and this is David. Today, we're going to walk through some of the recent news events throughout the month of October that we think you should be aware of. We'll also take the time to look through a few technical indicators and see what the charts are telling us. So, I'm going to walk us through today's presentation, and David, feel free to jump in with any questions as we move through the data.
Sounds good.
You are the voice of the customer. So first, the technical indicators. Now, a key level of support within the Bitcoin space is the 200-day moving average. This is the average price that Bitcoin has stayed above or averages out at over the past 200 days. Now, as you can see, and we'll come on to this later, it's pretty comfortably now above the 100,000. It's worth pointing out that because it is spread over 200 days, it does move up very slowly. But to be this level, despite the recent drop that we've experienced down from 126, 125K down to the current levels of around 110 to 112K, to have this 200-day moving average still above 103 is pretty astounding. And we're really solidifying above that. Now, if you want to sort of see that in action, what you can see is this blue line here moving along the screen. Well, that's the 200-day moving average. Now, what you can see is if you look back at say 2020, we've only breached that a couple of times. So that really, whenever you see a red line, that's an indicator of a death cross, meaning bearish momentum. And when you see an orange line, that's an indication of bullish momentum, so moving upward in price. Now, as you can see, since we had the last golden cross, we are still technically experiencing bullish momentum. And this often indicates, the golden cross itself often indicates the start of a bull run. Now, the price currently is above the moving average. It's a pretty strong trend. And so we expect our current positioning, or my current positioning, is I expect bull market continuation.
You know, that's helpful. Just going back to the other slide, it's really helpful to as they say, when in doubt, zoom out, because you know, I was looking at the all-time highs that weren't too long ago, about $126,000, where, you know, dropping down to about 111, 112 make me, as an investor, really makes me uncomfortable seeing that drop.
Absolutely. And look, I think those of us that have been in the crypto space long enough, definitely a few market cycles of over 4 years, get used to it. But yeah, it's definitely off-putting, especially after the largest liquidation event in Bitcoin's history of $19 billion during October. These are scary things. And it's funny you should mention that, because that actually takes us back onto the fear and greed index. So this measures the overall level of fear and greed within the crypto market. Now, as you can see, as of this morning, and I think it's dropped slightly today since I've put these slides together, but as you can see, the Bitcoin Fear and Greed Index is pretty much dead center, which, considering all that we've gone through, is pretty remarkable. And what's even more remarkable is that the stock market is actually in a higher level of fear than the crypto market, which isn't actually being shown in the data. Yeah. So it shows me that investors are generally pretty happy with the way things are with the way things are moving within the crypto market. And you can see that when you look at Google Trends, so search results or search interest over time for Bitcoin v gold. I've just done a comparison here because obviously gold has been in the news over the recent months for its insane gains. Now, what this shows is that retail interest is still very low versus prior tops for Bitcoin. So what that tells me is that the recent price surges that we've had, especially over the past few months to all-time highs of 126K, it's price rising without the mania, which means that big gains tend to happen before that hype. So when that hype returns, we could still expect a blow-off top. This is telling me, or this could be one indicator that tells me that the trend is slowly rising and that we're technically, in terms of the bull market, we could still be early cycle. Okay. Now, talking about gold, obviously you can see this slight drop off in gold on the red line recently. You can see that there's actually been slightly less interest. Well, that actually coincides quite nicely with the relatively small price drop off we've had in gold of between 6 to 8%. So after that rapid run, it could be seen that gold was technically overbought, and on a few metrics, which I won't go through here, we technically were. And so we've seen a bit of retracement on that. Now, long-term holders, on the other hand, although we've seen a slight dip recently in long-term holder supply, so this is anyone that's held Bitcoin, I believe, for over 6 months, the long-term holder supply is a really good indicator of whether people that have held Bitcoin are selling their coins into strength, whether they're selling them into weakness, or whether they actually continue to accumulate. So although we're not seeing accumulation at the moment, we're seeing minimal distribution, which indicates, once again, there's not technically a top yet. And what you could also see is that because we had a big run up throughout 2022, 2023, 2024, despite the price, which is the orange line, skyrocketing through new all-time highs, we actually have seen minimal selling, which means to me, when the bull market starts, we could start to see relatively rapid price increase.
Mm-hmm. That's a really good point about when we reach all-time highs, we typically see quite a big correction because the long-term holders want to take some profit and they just want to see some returns after waiting for in some cases, more than a decade. And so, yeah, it's nice to see that the price is continuing to stay relatively stable, as you've
absolutely
shown. Yep.
And don't forget, think about these people, long-term holders. I mean, this is a whole range of people with different motives, different incentives, retail, institutional, corporates, etc. Now, these people generally, although they have different motivations, they're essentially like me and you in the respect that if they are planning to sell, if they are planning to rotate into other assets, they generally want to do it when the bull market ignites. Yeah. And because despite the recent price highs, we haven't really seen that. We've only seen relatively minimal selling. It really does indicate a level of strength to me.
Yeah.
And that's kind of backed up by the RSI, so the relative strength index of Bitcoin. So this shows cyclically whether we're overbought or oversold. So oversold is obviously in the dark red color, overbought is in the dark green. And what you can see is we're far from previous peak levels. Momentum's rising, but it's not yet overheated. And the signals are kind of mid bull market, not the top once again. So once again, we've got like various indicators that are indicating that we're not yet at a top and that the overall market is pretty strong. Power law, obviously this is a long-term model, which many are skeptical of, but obviously the power law indicates that generally we never break the long-term power curve, which is currently sitting at around 47,500. So consider this a price of support in US dollars. And based on how we're currently moving, based on the 4-year moving average, we're currently sitting at 54,000. So we're pretty comfortably above that level. And so this supports the ongoing exponential growth thesis that the power law model suggests, meaning that we will continue to grow over time.
Can you explain to me what this is? What is the power law?
So the power law is a model based on certain connections or certain mathematical connections that we see within certain things. Now, I'm not an expert on it, and I won't pretend to be. What I would say is that we'll have a separate video where we go into start and explaining those things in detail. But all you need to know for the moment is that the long-term bull trend remains intact.
Excellent. Great.
Now, the stock to flow model. Now, this is a model that, similar to the power law, has kind of gone, well, unlike the power law, it's kind of gone a bit out of favor, mainly because there's been some divergence between where the model expects us to be and where we're currently sitting. Now, unlike the power law, this is a scarcity-driven valuation model. So it predicts that as the scarcity of Bitcoin increases, because obviously we have halving events, so every time you see a major wick up in the orange line, that's basically following a halving. And the basic thesis of it is simple, is that as Bitcoin scarcity increases, price should therefore follow, provided that adoption remains consistent, so demand. Now, as you can see, the price is pretty much 1/3 of the stock to flow. We're around the sort of 107 to 112 price mark at this point, and the stock to flow is indicating that we should be in the 300,000s. Now, what I would say is that historically, if you look at the model, at some point, whether it's early in the cycle or late cycle, you tend to experience a catch-up, and it tends to occur pretty violently. So that's what this model, if you still believe that it's intact, all models, as Michael Saylor says, all models are correct until they're broken. But essentially, if we experience a similar violent upside, the 300,000 plus level would be where this model suggests that we would be.
So as in the chart, back in 2022, we start to see it breaking down and kind of diverging from the model. But then it kind of revisits it back in 2024, and it goes above it slightly just for a short time. But then a third difference is quite significant.
It really is. But and it's worth saying that if you look back at the model, this is the first cycle where we've actually had seen such divergence, and I would say bearish divergence, as in either the model is incorrect and it's not a valid model, or it kind of adds idea to the thesis that you've heard this time is different, this cycle is different. Well, I mean, the stock to flow is one way that it definitely could be. This is the first cycle where we've seen large-scale institutional adoption through the ETFs. It's the first cycle where we've seen large treasury companies come in. And it's the first cycle where we haven't seen large-scale retail interest. So either way, despite those factors, we are lagging behind where we should be. But it could mean that this supports the idea of an extended cycle into 2026.
Yeah, they're saying it's a 6-year cycle rather than a 4-year cycle.
Could well be. Could even be an 8-year cycle for all we know, with a rapid, even faster increase up to 500 to 1 million at the end of that 6 years.
As this chart shows, I mean, there's so many variables, as you said before, that affect the price, and you can't just stick to one model. It's like the combination of models that I think really help to support the thesis.
Correct. And that's really what we're trying to show you, and this will be sort of a regular weekly agenda item that will run through some of these models as well as some of the others to kind of get an indication of what are the key indicators within the market telling us. Now, the next one of my favorites, followed by the one after this. This is the halving countdown. So you'll see within these green lines, obviously we were talking about the cyclicality of Bitcoin. The best gains, what you can see in these green columns here, well, the best gains tend to happen 6 to 18 months after each halving, when Bitcoin mine supply cuts in half. Now, I'm glad to say we are still within that window. So we could still see increased gains, but very soon we'll be moving out of it. Now, in terms of similarity, the cycle structure seems pretty similar to 2017 in terms of the run-up. But as I said, tops tend to appear as the window ends and closes. So the bull market, technically, according to this, in terms of if you're looking at purely amount of days post-halving, we're still inside it, but we're cutting it pretty tight. So I did a little analysis. I took some credit to Luke Broyles. He does some fantastic work. He released this fantastic chart showing how many days each Bitcoin has spent within each price level. So we're going up obviously by a factor of 10 each time. So you can see 1 cent to 10 cents, 10 cents to $1, $1 to $10, $10 to $100, etc. Now what you can see is that growth at the start of Bitcoin's journey was very, very quick. And then especially once you got into the $100 to $1,000 range, it started to slow. Now, what I've done is I've taken the averages of these to try and get sort of how long. Now, if you're taking all of the averages, excluding the 100,000 to 1 million marks, that's the current epoch that we're in, you're looking at 558 days, which means we've got about just under a year left if you take the averages. to within the $100,000 to $1 million price point. If, however, you take the average of $100 to $100,000, the largest three epochs, you can see that the average is 1,441 days, which would mean we've got roughly 1,220 days remaining. Just to put in that context, that's probably around 4+ years, but that's not long to be away from $1 million.
Wow, that's interesting.
So stay humble and stack sats, as they say.
Great.
You may never get these again. So that's it for the technical indicators. I'm going to quickly take you through some nation state news and adoption. Now I'm going to start off with my favorite. So JPMorgan, the renowned JPMorgan, the notoriously anti-crypto JPMorgan, specifically led by the seller of snake oil himself, Jamie the tapeworm Dimon, as I hear him referred to. They've had some, especially Jamie has had some views. So I've just got a few choice sayings from Jamie over the years. If I was the government, I'd close it down, referring to Bitcoin and crypto. I'm a major skeptic on crypto tokens, which you call currency like Bitcoin. They're a decentralized Ponzi scheme. Well, to that, Jamie, I say that the no Ponzi scheme has ever reached the heights of $2 to $3 trillion assets. The largest Ponzi scheme that I'm aware of was around 60 billion, which was the Bernie Madoff scandal. So that alone, if Bitcoin is a Ponzi, as he once claimed, we're definitely living in the largest Ponzi in history. Then once again, a bit of time later, you started to see his tone slightly change and become more optimistic. I don't think we should smoke, but I defend your right to smoke. I defend your right to buy Bitcoin. Go at it. Still not endorsing it, but then we get this in the past few days. JPMorgan to let institutions use Bitcoin and Ether as loan collateral, marking a major Wall Street shift. Now, this is a major, I can't overplay how much this is a major reversal for Jamie Dimon and his historical anti-crypto stance. To put it in perspective, when we say collateral, in the same way that if you want to remortgage your house, you can put down your house as collateral, meaning you can get better interest rates. Well, we within the Bitcoin space that believe that because of its qualities, Bitcoin is pristine collateral. And the crypto collateralized credit space in Q2 2025, or as far as I'm aware, was around 53 billion. To put it in perspective, many analysts believe that this move by JPMorgan alone could unlock 10 to 20 billion in new lending against it. So this is not only a major tone shift, and you could call it tacit endorsement. It's also a real opens up a whole new institutional base to the crypto market. And I think more so than that, it treats Bitcoin and Ethereum like treasuries and blue chip collateral. So corporates prefer borrowing versus selling, and enabling their institutional clients to do that really helps solidify Bitcoin and Ethereum within the industry.
I think you're right how much of a game changer this is for the market and the potential inflows of investment into Bitcoin, because currently most institutions, they like to borrow against their stocks and the blue chip stocks, right? But you couldn't do it with Bitcoin and Ether. For the the tax implications, you'd have to pay enormous amounts of taxes if you were to sell your holdings. Now you can do it with Bitcoin and Ether. That's incredible. I mean, yeah, that's great.
Well, think about it. It's you're completely right, David. As you say, if you want, one of the benefits of remortgaging your house is, say you've got $1 million house and you want to take out 10, 20K against it just to do some redevelopments or enjoy your life. You're not taxed on that. And because your loan to value is so low, the interest rates you get on it would be very, very favorable. And that's with real estate, where you've got huge amounts of risks, such as tenancy risks, geographical risks, risks of damage, risks of weather, corrosion, erosion, a whole myriad of risks associated with real estate, which just aren't present in Bitcoin. So think about what kind of interest rates these banks will have if you're putting up what we believe, as I said, pristine collateral to them? What would they offer you to get their mid summit?
Yeah, that's a really good point.
So other major story now, the tiny country of Luxembourg. Now Luxembourg is, for those of you that don't know, it's a tiny country in Europe. It's got it's also a major EU financial hub. Now they've basically the sovereign wealth fund of Luxembourg, called FSIL. I'm not sure if you could pronounce it FSIL, but I'm going to say FSIL. Is allocating 1% of their sovereign wealth fund to this. Now, I love this because obviously David and I always speak about the get started, dip your toe in and allocate 1%, start investing 1%. And if you can, once you're comfortable, start allocating 1% to Bitcoin of your investable assets. Well, if it's good enough for a sovereign wealth fund of a major EU financial hub, then to me, it should be good enough to you. And this is really significant because they're the first Eurozone sovereign wealth fund to make a Bitcoin allocation. Now, there is immense wealth pools within Europe, and hopefully this will signal some level of institutional confidence and government level adoption to other governments to help them actually make the same shift. So yeah, it's a really future focused diversification, and you never know, 1% may grow. David and I know very well that once you've studied Bitcoin enough and you've dipped your toe in, you've started to see the returns. 1% can very quickly grow to 2, 3, even 5 to 10%.
Exactly.
So
that's a good point.
Just to start. Now, in terms of some of the other reasons why this is significant, we have mixed reporting on sovereign wealth funds that currently have either indirect or direct exposure to Bitcoin within their balance sheets. The most notable one being Norway, and Norway's sovereign wealth fund, which has a relatively significant exposure to MicroStrategy, around $500 million. They also have exposure to Coinbase holdings as well, which is, I suppose, a level of an indirect form of exposure. We've also got the sovereign wealth fund of the UAE, which has bought the Bitcoin spot ETF. I'm not exactly sure which one. Oh, sorry, IBIT, which is BlackRock spot ETF. And my understanding is that Luxembourg will probably end up doing the same thing. I don't think they'll buy spot directly, but they'll be likely to purchase an ETF. But the direct isn't out of the question. Now, I did my own little maths on this. Now, the size of the Luxembourg's FSIL's sovereign wealth fund is 745 million. So pretty small potatoes in the grand scheme of things. That means that, sorry, 745 million euros. Now, it's expected to grow to 850 million euros by the end of 2026. So I've used some different price points, assuming that they're going to be buying into the market. And I've got, in terms of the amount of Bitcoin that they can acquire, anywhere between roughly 70 to 100 Bitcoin is where I'm putting my hat on. So yeah, it's worth pointing out that due to reallocation and if these funds keep growing, that it's likely that this shouldn't be a one-off and done. This will likely be a continual buying thing in order to ensure that the portfolio is sufficiently balanced. So small potatoes in terms of Bitcoin for institutions, but a really notable step.
But as you said, it's that 1%. It's that gateway into.
It is.
Yeah, that's incredible.
It really is, and especially the EU, which has been pretty, I mean, up until relatively recently, notoriously anti-crypto. Now, this just gives you an indication of sort of a nice top view of crypto adoption around the world. Essentially, the darker color, the more support or crypto-friendly it is. Now, obviously, in terms of the size of the investment markets, there is far more money flowing in from the US than pretty much anywhere in the world. But in terms of overall adoption, so retail size transactions that are over 10K, total crypto received in DeFi, decentralized finance applications, crypto received on centralized finance applications, India is still by far in the lead. But it's interesting that,
yeah.
Sorry, go.
So that surprised me because the government has been very public about banning the banks specifically banning the use of Bitcoin and the trading and exchange of Bitcoin.
Absolutely. And I think, to be honest, I'll need to research that a bit more. I think that a lot of the Indians are very tech savvy. So I think that a lot of these unregulated exchanges that operate sort of under the radar, exchanges that you can access with VPNs, as well as decentralized finance networks where you can obviously buy and sell crypto, is probably the reason for that. But obviously, I think it might be worth having a video on that once we've done a bit more investigation.
Interesting.
Now, this one I'm going to take with a massive grain of salt. But essentially, France's conservative UDR party has introduced a pro-Bitcoin bill that would basically seek challenges the EU's centralized approach to digital money. So obviously the EU is starting to push ahead with their CBDC, central bank digital currency. This bill basically claims that it would be bad for the people, as I'm inclined to agree with, and they're opting more for a euro-backed stablecoin. So it's very similar to what the US is currently doing. The reason I give this pretty much a 0.001% probability is I just don't see this getting across the courts. I just don't see this getting passed. But it's still interesting to see that countries as notable and as wealthy as France are having, there are Bitcoiners within almost every party worldwide in Western countries.
Yeah.
And that will, I believe, only continue to grow. Now, on to other levels of acquisition. Now, we had the largest Bitcoin seizure in US justice history. We had $15 billion worth of Bitcoin seized from what I understand was a forced labor scam that was running compounds at global pig butchering for global pig butchery. And it was essentially a large crypto fraud scheme. And essentially the US government, in line with the UK, the FBI, DIA, Department of Justice, basically managed to acquire $15 billion worth of Bitcoin, which, as far as I understand, is around 127,271 Bitcoin. Now, why is this significant? It's significant because the Trump administration and Scott Bessent, the Treasury Secretary, sorry, I forgot that wrong. My mind's gone blank. The SEC chair basically said that they want a tax-neutral way for the American tax buyer to acquire Bitcoin within their strategic reserve. Well, confiscations are a perfect way to do this. Now, to show you, if you look at the left-hand chart, you can see the orange line is the Bitcoin held within that strategic reserve. Obviously, this hasn't been verified yet by the US government, but it was previously sitting at 198,000. Within one fell swoop, the US government, that huge line upwards, now sits at around 326,000 Bitcoin. Now, what this means is that they've increased their Bitcoin holdings in one move by around 65%, which is
wow.
And what's even more important is that if you consider Bitcoin to be an interesting game of global game theory between warring power or competitive powers such as the US and China, you can see that the US and China were the biggest holders of Bitcoin. Obviously, these are unconfirmed, but previously, pre this confiscation, the difference between the strategic reserves were 198,000 for the US and 190,000 for China. So that gave the US a paltry lead of 4.2%. Now, if the US has that original 198,000 Bitcoin that they claimed to have at one point, and if all of this additional 127,000 were added, it means that they would now have a whopping 71% lead over China.
That's incredible.
So kudos to the US.
Well, do you remember that time when Germany started selling their holdings? What was it? They had
50,000 Bitcoin.
That's it. That's
it. When did they sell it? 2024.
About a year and a half ago. Yeah, almost 2 years ago. Yeah.
And what's worse is they just sold it in a couple of really big chunks. They didn't try and time the market. They didn't try and staggered their sells so that they would see less of a price drop between their selling. They literally just dumped it to get whatever money they could. And I think in one of our later videos, we'll do a bit of analysis on that. Maybe we'll keep it as a running joke to show how much Germany's little sale has cost them.
Yeah, because there were a lot of citizens in Germany that were up against, and they signed petitions. They just said they were advising the government, please don't sell our Bitcoin because this is for our future. You know, we're making the biggest mistake that we'll ever have made.
Absolutely. Well, you would have thought Germany would have learned from Gordon Brown in the UK and selling all of our gold back in the late 90s, early 2000s. And we went from one of the biggest sovereign gold holders to basically one of the smallest. And yeah, it's the amount of money that sale alone has cost us. I've actually heard that the idea has been floated within the Labour Party of the United Kingdom, as you can see in the chart, owns about 61,000 Bitcoin that they've confiscated. It's been floated about selling that as well. So hopefully the UK is not dumb enough that I wouldn't put it past them, since it was the previous Labour government that sold the gold, that maybe this Labour government is twice as dumb and hasn't learned from Germany, hasn't learned from Gordon Brown, and repeats the same mistake but with Bitcoin.
Wow, I'm surprised to see the Ukraine having such a large holding.
Yeah,
quite significant. Yeah,
I think a lot of that comes from donations. I think there were some substantial mining operations operating in Ukraine because of low electricity costs. I also think that there were some big confiscation activities. I'd have to look into it as to how Ukraine acquired such a substantial amount of Bitcoin. But yeah, as you can see, Germany would have been number 4 on this list, overtaking Ukraine, and now they're at 0. I think they confiscated something like 300 Bitcoin recently.
Oh, wow.
Yeah. So on the bad side of things, the US debt has exploded to $38 trillion. Now, just to put that in perspective, because a lot of people have problems understanding how big $1 trillion is. If I were to, and apologies, my math might be slightly wrong. If I were to count one number at a time, one number each second, so 1, 2, 3, 4, I believe it would take me around 11 days to count to 1 million. If I want to count to 1 billion using the same tactic, it would take me 32 years. And if I want to count to 1 trillion, it would take me 32,000 years. So if someone was to pay you $1 a second, think about how much time it would take to repay the national debt for the US. So it's absolutely staggering. And you can see from these metrics, $110,000 per citizen in debt and $327,000 in debt per taxpayer, because not everyone pays taxes. But there is a tiny bit of silver lining that I did a bit of math on. With the US's recent Bitcoin seizure, they've managed to increase their Bitcoin per citizen from 0.000576 to 0.000950. So yeah, they've almost doubled it per citizen. Yeah, which is a small silver lining. Yeah, small silver lining.
That's a great calculation. It made me feel better for our future.
Now, well, yeah, I mean, but if that made you feel better, this one will probably make you feel a bit worse. So, as you can see, it took 200 years for the US to reach its first $1 trillion worth of debt. Now, according to the Joint Economic Committee chairman, David, I'm not even going to try and pronounce the second name, he basically claims that the US reached its most recent $1 trillion worth of debt within 71 days.
Oh my!
Which means, bringing us on to our next slide, it's not out of the realms of possibility, if you follow that logic, that we will reach 39 trillion by the end of the financial year pretty easily, and that we will reach 40 trillion Q1 next year. So the size of this debt problem, David and I will cover it in other videos, but it is really substantial, and it's getting worse, and it's accelerating. So a couple of quick things: Bitcoin companies and ETFs. This is the Bitcoin 100, so the top public Bitcoin treasury companies spread throughout the world. You can see the country, you can see substantially. MicroStrategy is the biggest, dwarfing pretty much every other Bitcoin company combined, and that's because they had the first mover effect. In terms of recent acquisitions, you can see it's been pretty dormant. We've got MicroStrategy, we've got Kango, we've got Strive, but yeah, we've got American Bitcoin Corp, but yeah, not too many acquisitions recently. But let's just break down MicroStrategy's acquisitions. So over the course of October, they had 3 acquisitions totaling 778 Bitcoin. Rough acquisition cost was around 89 million from my maths. That means that their average buy price would have been around 114,000 per Bitcoin. And another way of putting that is they would have increased their Bitcoin holdings by 0.12%, which I still think is pretty amazing considering the valuations that we've got with Bitcoin at the moment. I mean, Saylor is just relentless. He just continues to buy.
Well, what surprises me is the average price of their purchases now. It's really quite high. I remember in the days when he first started acquiring back in August 2020. This was right after COVID hit, and we were in the thick of it. And he basically doubled down with about, in the early days, it was like 48 million. And then it was like $500 million, and then another $500 million. And he just, then in the billions. And it was like the average price was, $30,000 US at that time. And it was quite small compared. Now, if you look at the average price, it's quite high.
Well, 74,000 is pretty high. I mean, $750,000 is pretty high. But what I find interesting about Saylor's purchases is, it strikes me, when you get FOMO and you're like, God, I need to buy more. Well, that's what Saylor's purchases strike me at. He's not price sensitive by the looks of things. He is just buying if he has 43 million on the 10th of October. He is buying, even if it's at 111,000. If he's got money to buy 168 Bitcoin, that's what he buys. If he's got money to buy 220 Bitcoin, even though the price has gone up by 11K, he's doing it.
Yeah. So, he famously said, "I'll always be buying the top."
Yeah, always. And I believe him.
Yeah.
I've heard you can always trust God and taxes. I think we got to put Saylor's ability to buy Bitcoin in that.
Yeah, but with 640,808 Bitcoin, it just makes me nervous as well with the holdings, because this was a question that was asked to me recently. What if any of the big players were to sell their Bitcoin? I mean, God forbid Satoshi's million plus 1.1 million Bitcoin were to be sold, or just dumped in the market. What would happen to the price?
Absolutely. Now, look, let's use some comparisons. You mentioned Germany earlier. If you look at the treasury companies, we saw a dump from that, but the market recovered easily. I think Germany sold around the $70,000 to $50,000 mark. I think it was around the $50,000 mark, and we've easily recovered and more than doubled since then. The market has just swallowed them up. The ETF buying has been relentless. So in terms of systemic risk, you can say that the only one that really causes systemic risk would be MicroStrategy. You could also have others like Mara and Metaplanet maybe unwinding, and then that leads to further treasury companies who've over leveraged getting into financial difficulty. And so you could, if you have a cumulative value on them, you could potentially see like a substantial drawdown equivalent to MicroStrategy going bust. But I think MicroStrategy appears to be the cleanest shirt in the laundry.
Yes, but also as it relates to kind of gaining entry into the S&P 500. I mean, MicroStrategy is still denied that entry because
you read my mind.
There we go. Nice.
There we go. So, do you want to talk about this? I'm not sure if you've had a chance to see the news that only came out today.
Oh no, please continue. I preempted your slide here.
You did indeed. So basically, the S&P grading agency. Good news. they graded MSTR. So they're the first Bitcoin treasury company to receive a grading from one of the renowned credit rating agencies. Yeah. The bad news is they've been given a B-, which, as you can see from the chart, is classified as high yield or junk. And basically, the way to think about it is, I asked ChatGPT to explain to me what the B- rating would be as if I'm 5, and it said paying bills while juggling chainsaws, significant risk. So this tells me that these rating agencies still don't know what they're dealing with, and if they do, maybe it's a concerted effort against it. Strategy has had one of the best performances of any company within the US, and there are 4 requirements to actually enter the S&P 500. And as you can see, big MSTR comfortably meets 3 of them, and it's only the positive earnings that supposedly it doesn't meet. But even if it met all of these, it's still completely subjective to the council that actually control the eligibility as to whether it will be added. So I think Saylor must be having a laugh to himself that he's been added to the NASDAQ, but not to the S&P 500.
Yeah.
But one day it will come, I believe.
Yeah.
So
interesting.
Yeah. And look, the S&P, as you can see, has pretty much, I mean, we've had pretty substantial gains. 18% for an index as large as the S&P over the past year is huge, and we'll probably breach the 7,000 mark by the end of the year. But I mean, we've had an all-time high price of 6,900 already. Bit of a pullback, but yeah, 6,900. So I mean, you could argue that getting added to this indice would be amazing, but things don't look so rosy when you actually start to price the S&P in Bitcoin. Despite its amazing performance, you're still pretty much, the green line is indicating your purchasing power in the S&P. So how many Bitcoin you could buy with your S&P shares, and you see that it just has been decreasing substantially since 2012. There have been a couple of peaks and troughs, but the trend is pretty obvious. So I don't know what those rating agencies, why they don't consider Bitcoin as equivalent to cash on the balance sheet. Yeah, but I believe that will come over time. So on to our last couple of things. We've got 3 macro catalysts that I want to sort of run past our viewers, that they should be aware of. First one, Fed rate cuts. Bitcoin loves liquidity. It loves lower interest rates. There is now a 98% probability, will show up on Polymarket, which is a crypto-based online betting platform, which gives a 98% probability of the Fed cutting rates by another 25%. 25 basis points, so 0.25%. I tend to quite like Polymarket. It's wrong sometimes, but you tend to follow where the money's going and where the big money's going. And so I think that later today, I think if the Fed rate cut decision is today or tomorrow, we will see them lower that, and maybe even an end to quantitative tightening. But obviously that's a short-term catalyst that could encourage more risk-on approach, which would mean we would see money flowing back into the NASDAQ, to Bitcoin, etc. Next one, we have obviously, I mentioned the Bitcoin liquidation event of 19 billion. One of the things that triggered that was a tweet on Rumble from a post from Rumble on Rumble from Trump, basically indicating that he was commencing another trade war with China. The good news is that Trump has another meeting with President Xi for their first in 6 years on Friday. And although we don't know the full agenda, we think a few things will be on there. Trade and tariffs. Obviously, they both want to avoid the new 100% tariffs that Trump has proposed will come in on November 1st. Rare earths. Obviously, Trump's tweet indicated that China was basically cutting off access or implementing huge tariffs on rare earths. Now, rare earths are used in pretty much everything in terms of modern technology. And China is by far the biggest producer and owner of rare earths. So it's really a stranglehold that they can place on the rest of the world by doing so. So that will definitely be on the table. Russia and Ukraine. I can imagine that Trump wanting to end the war might indicate that he will ask Xi to pressure Vladimir Putin into ending that war. Taiwan, obviously the one China policy, the Chinese will be very keen to make sure that that policy continues, and that ideally if they can stop the US continued support of military weapons to Taiwan, that would be a big thing for them. And obviously I think the US will take the opportunity to continue to press for human rights following the Hong Kong, which seems like sadly a distant memory nowadays. But key thing to take away from this is markets do not like the unknown. So until there is a trade deal confirmed, you'll continue to see markets a bit shaky, and many would argue that's why you've seen a bit of a rush to gold, is that fear that drives markets. So any kind of deal between the two, especially a quick one and a positive one, would definitely lead to stability in markets and once again a more risk on appetite.
Well, coincidentally, the 31st of October is Halloween, and back in 2008, the same date, Halloween, Satoshi Nakamoto launched the white paper. So
maybe it's a sign.
Ominous date. So I'm hoping for the best on the 31st.
Yeah, well, maybe the inventor of Bitcoin is coming back to support the first Bitcoin president of the United States and help him pump his bags in preparation for the midterms.
There we go.
Right, and the last thing, the government shutdown. So for those of you that are unaware, the government has been in a 28-day shutdown in the US. Essentially, Democrats and Republicans are unable to come to a deal. Now, all critical services are still in place, but obviously, the longer this goes on, once again, markets don't like uncertainty. Now, what you can see is on the right, I've shown you a list of the longest US shutdowns and the size of them. Now, what you can see is that already in terms of employees furloughed, the current one is by far the biggest. We've got 900,000 employees currently furloughed, and it's currently gone on for 28 days. And the longest one we had, coincidentally, was also Donald Trump back in 2018, 2019, was 35 days. Wow. So I believe we've reached that record, unfortunately, but because I think it plays into both the Democrats' hand in terms of alienating Trump, and it plays into the Republicans' hand, because by basically shutting down government, all of these programs that the Trump administration wants to get rid of, they can basically show to the public, well, they're useless. They don't really do anything. And so as part of the deal that they might hopefully eventually strike with Democrats would be to cut a number of those useless programs, which I know that Elon Musk and Doge were keen to do in order to bring more savings back to the US, cut some of the fat. So they're the three biggest catalysts at the moment, to be honest. And yeah, that is essentially it in terms of the update for today. David, did you have any final words for our viewers? Anything that you wanna take away?
Just what an incredible walkthrough. You know, each time you went through a slide, I kind of felt like this session was a therapy session, because like I was on the edge, right? At times, you know, in the course of a week, whenever we saw these big dips, I'm thinking, you know, how am I going to handle? Is there anything I need to do? And what you helped me to kind of realize was, you know what, these are just normal things that are happening to the markets. We zoom out and we actually see these are actually quite positive things that are happening in the markets, and it's gaining momentum quite significantly. I mean, they call it October for a reason. And you know, there's so many factors that are playing out, but it's all supporting the single thesis that Bitcoin, in comparison to other assets, is continuing to appreciate in value. And it is like, it's a train that cannot be stopped. In Lynn Alden's words, no one can stop this train. It is on a course to really be the single most the hardest asset for institutional investors, for governments, for banks, and more specifically for us as retail investors.
Absolutely. And I think my favorite thing of today was the JPMorgan thing. I always say this, and David and I have said this multiple times to each other in our private meetings. Watch what they do, not what they say. Because if you just watch the price, if you just read the mainstream media's news reports, you will miss the moves they're doing in the background. Now, with the JPMorgan move specifically, I don't know if you noticed, David, the keyword being there for institutional clients. So once again, they are enabling their big customers with millions, billions of dollars to get access to these things first. Yeah. Before eventually they open them up to us. It's the same thing BlackRock did. It's the same thing Fidelity did. And yeah, I think we'll continue to see it. But I think that having a player as big as JPMorgan state that Bitcoin is an asset worthy of their collateral lending platform is astounding. And it's a massive achievement.
It is huge. I agree with you completely. What's different about Bitcoin and the kind of history and the evolution is in no time in history have you had an asset class that has been front run by retail investors, right? Where we've had the opportunity, the regular citizen and the person on the street has the opportunity to become more wealthy than Wall Street.
100%. 100%. I mean, it's really, people talk about it as like a once in a lifetime opportunity. I think David and I have spoken about it as a once in a species opportunity. I mean, how often do you find sound money, hard money? And we'll cover it in other videos, but essentially those circumstances that created Bitcoin, enabled it to happen, are almost impossible to recreate. I like to think about it as, if you've ever seen the equations for all the things that must be true in order for life to occur on Earth.
Yeah.
Well, yeah. Pretty similar to Bitcoin. There's so many paths, and there'll be paths and there'll be gates in the future that we have to pass. But there's been so many gates already. The block size wars, institutional adoption. I mean, competitors. Yeah, Ethereum moving to proof of stake instead of proof of work, taking out its biggest competitor in terms of the general thought process. Litecoin and its proof of work competitors. It's basically the pseudonymity of Satoshi himself, herself, themselves. Yeah, it's almost impossible to replicate those things. And I think we'll do a video on that just to really get that across. But to your point, because it was your last comment about you were looking for, it's like a therapy session, looking for what you could do to sort of continue to stay upbeat. I understand like your comment about if in doubt zoom out. Now I know a lot of Bitcoiners are unhappy with the returns. Like year to date, the returns are about 13.5%. Yeah, which for Bitcoin is, especially at this stage in the cycle, is very, very demoralizing. However, by traditional standards, 13.5% is pretty effing good, to be frank.
True.
Yeah. And if you take it from, that's just year to date. If you take it for the past year, it's still 58%. If you take it for the past 5 years, 773%. Wow. So as David said, if in doubt, zoom out. Yeah.
Excellent.
Anyway, guys, unless you've got anything else, David, I think we'll call this one a wrap.
It's a great place to end.
I think so. Anyway, guys, thank you for joining us today. Don't forget to follow us on Patreon, or if you'd like to have a call, visit our website at 1percentbtc.com, and you can book a meeting with myself and or David. We'd be happy to help you moving along either your investment or Bitcoin journey. And don't forget, when it comes to Bitcoin and your investments, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they act with conviction.
Be a 1%er.
Thanks, guys. See you later.
Bye-bye.